Peter Eliades with you. This is Stock Market Cycles Update for the week ending March 20th, being recorded. It's March 22nd right now, about 6:05 p.m. is when this recording is taking place. So I'm going to keep this short. Here is the bottom line. There are significantly lower confirmed projections for the NASDAQ 100. So you say, well, what about the S&P and the Dow? There are not significantly lower projections for them. In fact, the argument can be made that the orthodox projections, all the way up to nominal 4-year, have been met. But here's where we stand. There are longer offsets involved with some longer-term projections that we can argue are in effect now. We very seldom use them because there's very seldom reason to use them. There was in 2007, in fact, we recently discovered that some longer-term offsets would have given exact downside projections for the 2007-2009 decline. But we want to show you now, we want to go through this sequence of lower projections in the NDX, which have been confirmed, as you can see from this chart right here. It would take a pretty spectacular rally back up here. That's not to say it can't happen, but a pretty spectacular rally up here to begin to invalidate these projections would take almost a 50% retracement to get back above both these offset lines. So without that happening, we've got projections to 53.8285 to 61.6697. So those are nominal 40-week projections with 20-week offsets, the equivalent of 20-week on the daily charts. This is the next longer one. This is nominal 78 to 80-week projections, and as you can see, even dramatically lower. We're talking about 48.0582 to 53.0897. Okay, this is the S&P, and these are closing price projections. We've got a pretty big window down here. One of the important things to notice is that basically all the downside projections have been satisfied on a minimal basis on the S&P. We told you that the other day. But the fact that the NASDAQ 100 has confirmed significantly lower nominal projections means that this is not a time to be complacent and think that, okay, the decline is all over and now we turn around to the upside, and despite all the bad news and the coronavirus and whatever, from here we go straight up. Don't think that at all. I'm going to be spending some time next week showing you the possibility of significantly lower projections on the S&P and the Dow, and that's by using longer offsets than we usually use. As a general rule, the longest orthodox offset is a 2-year offset for a nominal 4-year projection. On a weekly chart, that would be 100 to 110 weeks. That would give you nominal 4-year projections. But research has shown us that some of the old projections in the past, you can double those 2-year half-span offsets to 4-year half-span offsets that would give you nominal 8 to 8.5-year projections. So that's something we're going to be looking at next week. We're not going to do that now. All I want you to be aware of now is that there are confirmed significantly lower NDX projections, and that both the Dow and the S&P have met their orthodox downside projections on a minimal basis. Doesn't mean they can't go lower. As I've shown you before, there are significantly lower projections possible, and you can see one of them here on the S&P. This is nominal 78 to 80 weeks, and it gives you as low as 2106. We showed you a projection earlier that's as low as 1900 on the S&P. So that's where we stand. We'll have more in-depth updates for you next week, but that's it for the weekend update. Thanks for watching.